You're here today at the event for 1,000 companies to inspire Europe. What can we learn from the companies that presented their projects today?
Well, it's always stimulating that in Europe there are thousands of companies that are doing a very good job, mainly SMEs. And the London Stock Exchange Group every year selects 1,000 examples to present to investors, because many times on one side we have people or funds that want to invest in companies, in real economy, but do not find on the other side the SMEs that have investment projects and don't find money to grow their projects. And so meetings like the one we have held today in this house are very helpful, and also for policymakers to touch real economy, because we are inside in this bubble that without a contact with the real world, our job has no sense.
The London Stock Exchange is obviously about finding capital from the markets rather from banks and bank lending. Europe has got a pretty poor record on this so far. What can we do to really transform it? Why isn't it getting any traction?
Well, we have a divergence in the last years in Europe. In Italy, in France, and in Spain, there is a banking concentration. And in Paris, Rome, and Madrid, I think that it is a mistake to think that with three big national banks, all problems will be solved concerning to credit, to the economy, or something like this. And for me, it's a mistake. And also in the south of Europe, the percentage of banking credit in the total of the credit of the nation accounts to 80 or 90%, and in the US is the 20% only. So we need urgently in the south of Europe to diversify the credit of our economies and to open the door to alternatives of financing which are not banks. And in my opinion, this is one of the main differences between North and South today in Europe, and in a very problematic situation, because the trend is to increase differences between the efficient Nordic and Central Europe capital markets and the south of Europe.
So how do we turn this around?
Well, to reinforce the EU law. For instance, the European Commission has produced some documents and papers explaining that the lack of implementation of the late payments regulation is destroying, is eliminating, is forcing to close thousands of solvent SMEs in the south of Europe. And it also has implication in the capital markets unions, because why a Nordic investment fund from the north of Europe should invest in a company in the south of Europe if, for instance, this SME with a brilliant project will not be paid in his bills? Because in Spain, for instance, there is no sanctions regime for big multinationals that pay in 2 years' time the bill to SMEs. And this is against the EU law. So before talking about capital market unions, we need to put a level playing field, to establish and to impose in the south of Europe the same level playing field concerning the late payments directive. So because before of that, there is nothing to build up in terms of capital markets union.